What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. Welcome back, guys, to episode 15 of the M1 Journey. It's the first episode of 2021, so Happy New Year to everyone in case you haven't heard already. It was kind of a mixed week on the market. We saw some very modest gains during the short trading week, but today, Monday, the first official trading day of 2021, we saw a pretty significant plunge to start out the day, and currently it's rebounded a little bit, but we still have about another half hour until the market closes for the day. With it being the first trading session of the new year, I did want to kind of talk to you guys a little bit about some of my expectations, as well as some of what I could see happening throughout the year as far as the market performance. Obviously, I'm no expert and I'm no forecaster, but I'm going to try to share some of my thoughts about what I could see playing out depending on a couple of different scenarios that we'll see develop throughout the year. In regards to my own portfolio, things were pretty flat overall. Didn't really have too much going on. Luckily, I did manage to make a couple of purchases this morning to kind of buy on that dip that we saw. If you've been following my social media pages on Instagram and Twitter, I mentioned a little bit about that last night, about what I was buying, and we'll get into that a little bit later in this video. But if you guys haven't watched my Let's Discuss video from last Thursday, I talked about low stock, shared my thoughts about that. You guys should definitely check that out if that's something you're interested in. Otherwise, this Thursday I will be talking about another investing topic. I have nothing set in stone yet so far, so I'm pretty flexible on if you guys have any suggestions. So in case, again, if you haven't already, please like and subscribe. If you're new to the channel, I always trying to build my base a little bit and get some more viewership, so if you enjoy my stuff, definitely check that out as well. So I'll make my disclaimer and then we will look at the portfolio. So guys, of course, as always, got to make my disclaimer that I'm not a financial advisor. I'm not an expert. I'm still very young at 20 years old, almost 21, about a month until my birthday. But anyway, still trying to figure it all out myself. So please do your own research. Please do your own due diligence before making any investment decisions with your own money. Of course, I make these videos for you guys, for your entertainment, but please don't make that your only research when doing any investing. That's the best advice I could give you. Without further ado, let's check out the portfolios for the week. Okay guys, so here is the portfolio update for the week. As you can see, we're down just a little bit less than 1%, about 128, but all that damage was actually done today. Pretty big dip in the market. Actually, as of right now, the market just closed. So this is the final number for today, down a little bit over 1.18%. So for the week, we're down. For the month, we're hanging steady, up about 1%. For the quarter, though, still a tremendous quarter, best quarter I've ever had. And then, of course, all time, we're still sitting very nicely at almost 22% growth since July 2nd. My loser of the week, though, actually go over here to my aggressive portfolio where things have been a little bit worse. I did make an investment today, so that's why you see this huge spike. But the aggressive portfolios where I had my losers of the week, had a couple of them. Roku, Boeing, DraftKings, Carnival, all down 6% or more, especially DraftKings down over 8% this week. But I'm not really too worried. This is exactly the kind of volatility I was expecting with this portfolio. That's why I bought it. Just kind of have my toes in the water a little bit in some of the more aggressive volatile stocks that I don't usually invest in. So my Roth IRA, things were pretty steady. Still was down for the week, a little over 0.5%. But again, today was the down day that led to that, down over 1.1%. Still had a very good quarter in this portfolio as well, up 8%, and all-time up a little over 9.5%. So my winner of the week actually was in my dividends, and was actually AT&T. AT&T was up a little over 3%, so that was one of my best performing stocks of the last 7 days. So as far as my activity, you can see I have a pretty solid cash balance here of a little over $150. That is my bi-weekly deposit from last week that I decided to not invest. I will actually be doing that tomorrow. But I also made another deposit this morning, made 5 purchases. You can, well, actually, if you saw my Instagram post from last night, you saw these were the companies I was buying, but I didn't show how much I was buying of each. So I ended up picking up pretty decent fractional shares of all of these. This one was about 1/4 of a share. This was about 1/15 of a share. This one was about 1/4 of a share. This was about 1/2 a share, and this was about 1/10 of a share. So not anything too crazy, but wanted to beef up some of these positions a little bit since they were either pretty flat for the month or down. So I have another $150 ready to go for tomorrow. I haven't decided completely what I will be putting the investment into. Probably something more in my dividend slice. Maybe information technology, or maybe consumer staples or industrials. Probably split it into 2 of the pies. So as far as other activity in my portfolio for the week, had a couple dividends. My Vanguard S&P 500 ETF paid me a dividend. Brookfield, I'm not quite sure what this was about, but I got my dividend from them on the 31st in the form of several different payments and some negative amounts, as well as my monthly paying ETF, my SPHD, that paid me $3.85. So nothing too crazy in the way of dividends, but still, any money is better than no money. My activity in my Roth IRA, nothing really going on there. Haven't made any deposits since the 21st, but I did get that same S&P 500 ETF paying me a dividend, as well as my bond market ETF paid me 3 times, as well as my total stock market ETF also paid me on the 30th. So that performance in this has still been pretty solid. Only have one loser here, and it's almost completely broken even. So that's still looking good. And then my aggressive portfolio, I did make a deposit this morning. I will be putting $100 into this portfolio every month on the 1st of the month. Since this was the first trading day of 2021, I couldn't invest on the 1st, so it finally went through today on the 4th. So about $100 there, of course, split between the 10 holdings, all depending on what needs. I'm probably not going to do anything but auto invest in this portfolio depending on my allocations. So all pretty much equal, nothing too big. Carnival was the least, and it looks like Amazon was the most. So the way this portfolio is looking, not so great to start off with, down almost 2%, but of course this could change rapidly in a single day. DraftKings, Boeing are my 2 big losers, 10% there and 9% here, but that could turn around any time, and this is more just see what happens. So like I said, nothing too overly exciting this week in the long-term portfolio. I'll show you my dividend added for the week. I only added that $170 that I put in my long-term portfolio. That added $3.75 in annual dividends for a pretty low yield of 2.2%. This is my total cumulative dividends, still at just over $700. If you saw my video from last week, I'm trying to get that to over 1,000 by the end of 2021. So, like I said, nothing too exciting going on this week in my own personal portfolios, but I will use some of the extra time to discuss my thoughts for the direction of the market in 2021. So that'll kind of wrap up this week's portfolio update, but I did want to kind of share some of my thoughts about different market expectations this year. With everything going on, I could see a number of things playing out in the markets to where we see some growth, where we could see a potential major pullback. And there's, of course, a lot of variables that go into different things like that, but I just want to kind of share my brief thoughts about how I could see things shaking out. As many of you know, tomorrow is a pretty big day with the Georgia Senate races, the special elections that, depending on how they turn out, could really shift the balance of power in Congress and in the federal government as a whole, with a new administration coming in this month. How that goes could really impact the markets, especially in the near future. I could see if the balance of power really shifts towards the Democrats, I could really see a major pullback on Wall Street. Generally, investors don't like to see a total government control by one party. They really like split government. So I would imagine most of Wall Street is hoping for the Republicans to maintain control of the Senate. So I could see things shifting either up or down depending on what happens with that. But it is important to note that Wall Street always seems to have a short-term memory. So that means anything that affects them temporarily will not affect them indefinitely. So realistically, I could see it having a temporary effect, but it wouldn't last very long. In fact, really, if you would have told me back last March or April when we had the big crash that the Dow would be back up around 30,000 this quickly, I would have said you're crazy and there's no way, but here we are. For the Dow for the year, I think there's a solid chance that we will get back to some sense of normalcy this year, to where we could see that standard 10% or so annualized growth in the markets kind of rule the day a little bit. I could see maybe ending the year somewhere around in the 33,000 range. That would really be my best case scenario. I think that would be realistic. I think anything more than that would be very optimistic, to say the least. But as far as a worst case scenario, I could see the economic recovery not being as strong as initially thought of, to where we could see not only a correction, but a full pullback of upwards of 20%. A standard correction is pretty normal, of about a 10% reduction of one of the major indexes, and that happens about once a year at least. And there's nothing to fear. I mean, it's scary to say that the market could go down 10%, but it's completely healthy in a standard market to protect against bubbles and really buying just solely on speculation. So I don't foresee that definitely happening, but I wouldn't be surprised if it did, because of how things have moved, especially over the last 6 or so months, where we've seen such vigorous growth in the markets that I don't believe is totally sustained by the underlying economic factors. So that's kind of my thought on that particular issue. Looking at the NASDAQ, it's a little bit harder to see how things can play out, at least when compared to the Dow or the S&P 500. The NASDAQ, I believe, in 2020 grew somewhere between 40 and 45%, which, all things considered, is quite remarkable. So with that, such large growth in a singular year, especially with the poor economic conditions that surrounded most of 2020, I could see some rotation out of those high growth tech-oriented stocks into more blue chip value, solid companies that investors have really clung to for many years now. Consumer staple stocks, communications, different things like that are stuff I could see more and more investors rotating into. Kind of getting in those defensive stocks that can weather any kind of economic storm that may still be coming for us, but that obviously may not happen depending on how we still keep going in 2021. If the economy does keep going on, then I could see those tech stocks really still being the focus of the markets. Stuff like Amazon, Tesla, Apple, Microsoft, the major players that everyone always focuses on. Those could still rule the day, but I really don't think the economy is quite where investors think that it is, or many of the population really wants it to be. But I would hope I was wrong, or I hope I am wrong at least on that factor. But just with everything going on, it's just hard to imagine that we're as strong as where we were even a year ago, when the economy was one of the best, or probably the best in our nation's history. And of course, you can never discount how foreign markets and how our foreign relations will tie into things. We still have to deal with China and our trade agreements there. So that will definitely have an effect on our markets here at home. So my best guess and my final comments about it is, don't expect anything, I guess. If there is that pullback, don't fear it. See it as an opportunity. I know I definitely will. I think dips or a market crash is not a bad thing. I mean, it's scary, don't get me wrong, but it's not something to fear, because as history has generally shown, the market always bounces back. So if you would have bought those March lows or April lows then, and if you'd held it all the way through now, you would be looking great. I mean, the market was so undervalued at that current time that now I think we switched into a little bit of an overpriced market, to where I almost think a correction is necessary. So if we do continue on this growth, then I would say ride the wave. It'll be harder and harder to buy, but there are different things you can do to kind of price your way into the market. Definitely dollar cost average your way in. Don't invest large sums of money at one time. Kind of sprinkle it in here and there when you get an opportunity to do so. And just really protect yourself against that volatility that still may exist. So those are some of my expectations for the year. I know that's not very specific to say the market could either go up or go down, but that's honestly where we're at. Anything could truly happen, especially after the year we just had. I really believe anything is possible. So those are kind of my final comments. Of course, if you enjoyed the video, like and subscribe. I really appreciate it. I hope to get some kind of idea what I'll be talking about on Thursday, so I'll let you guys know sometime in the next couple of days. But I will leave you guys with this viewer question. What are your guys' expectations for the market in 2021? Feel free to share those in the comments, and I thank you guys for watching, and I hope to see you guys on Thursday.